Okay, the title of this says it all. I built an XRP signal generator that predicts moves before the news hits. This started out as a pretty straightforward project. I was mapping Bitcoin's news cycle. Notice the Bitcoin price is in orange and then XRP in blue. I was mapping Bitcoin and I wanted to see how price had responded over time based on different events. But then I decided to put the XRP in there, and that's when everything started to take a turn. I started noticing something unusual. XRP was consistently moving in sync with Bitcoin, sometimes with a slight delay, but the relationship was obvious. Then I cleaned up the data, I filtered out the noise, and that's when a deeper pattern started to emerge. A pattern that could be used to generate real-time buy and sell signals. And not just signals for historical backtests, but something that could potentially be used to spot big moves before they happen. So I built a system to do exactly that. I'll show you how it works, but first tap the like button if you're into real research and digging into stuff most people overlook. Before we dive into these news events, let's talk about something crucial: XRP dominance. Dominance is shown here in green for XRP. When I say dominance, what I'm talking about is the percent of the entire crypto market that XRP makes up. And I've got the scale over here on the right. So in this instance, close to the 1 year mark, later summer 2014, you notice XRP is roughly in that 0.5% dominance range. And then at its peak of this first year, it's around the 6% mark. So the way this is calculated, you literally just take the value of XRP, all the market cap, and divide that by the market cap of the entire crypto market. So as an example, if the entire crypto market was worth $1 trillion, and let's just say at that moment XRP was worth 100 billion, that would be a 10% XRP dominance, or XRP.D. XRP's dominance doesn't just change when XRP's price goes up or down. It changes when Bitcoin and the rest of the crypto market move also. Bitcoin has been the king of crypto for a long time now. Its dominance has hovered around 90% back in this 2013 to 2014 time range. And almost everyone in the market was only focused on Bitcoin, while XRP and all the other altcoins were just tiny little pieces of the entire puzzle. But this is the interesting thing. When Bitcoin moves, it shifts the entire crypto market's dominance. So if you notice here, this whole period early in the first year of XRP trading, as Bitcoin is rising in orange, you notice that the XRP dominance is falling. And that's just because, and also notice the price of XRP is dropping. So it's people are pumping money into Bitcoin during this October, November timeframe. People are pulling money out of XRP, and obviously Bitcoin, which is the bulk of the market, is rising. XRP, which is a small percent, its price is falling. Obviously, the dominance is falling. But you could have other situations like here where XRP starts rising and it is moving up faster than Bitcoin at that time. So its dominance begins to rise. Ultimately, with dominance, general money flow in and out of crypto also affect XRP dominance. During speculative frenzies or panic sell-offs, the dominance numbers start behaving in really interesting ways. And I figured out how to process all this data to generate signals. And here's where things really start to get cool. I went back through the first full year of XRP trading, where you see here, from August 2013 to August 2014, and lined it up against the major news events that shaped the early Bitcoin market. This wasn't just the headlines. These were some of the most pivotal moments in crypto's early history, the kind of events that had a clear and immediate impact on market behavior. I'll just go through some of these real quick, and then I'm going to get into the analysis. So starting October 3rd, let's go through this real quick. Fed seized the Silk Road. This, although the Silk Road was a black market where they were selling other illicit activity, people were paying for that with Bitcoin. This is all bad. This associated this bad kind of criminal stigma with cryptocurrency in general. But what it did show, it showed people that you could actually use cryptocurrency as a viable currency. It could actually be used. It was being used on this marketplace, and people were accepting it on both ends to buy and sell illegal goods. But it did show that there was utility there. And this really started to pique some interest. And that is when Bitcoin really started to take off for the first time. And within a week of them seizing the Silk Road, Baidu, which is the Chinese version of Google, they start accepting Bitcoin for some payment on October 11th. We go forward a little bit more. Now China's starting to kind of crack down. December 5th, China bars banks from accepting Bitcoin transactions, which put this huge damper on Bitcoin in China altogether. And then just a couple of weeks later, December 18th, China's largest exchange no longer accepts yuan deposits. So people cannot, in China, they cannot deposit their money to buy Bitcoin. So this is all of a sudden, you had, as quick as it's going up, it starts going down. But this is all great stuff, because this massive volatility that we see in this 2013 to 2014 really causes a lot of moves with these dominance numbers. And this was really good for me, being able to capture all this and generate these signals for XRP. So I'll keep going. January 4th, we get a little positive news. Bitcoin and XRP both start going up when January 4th, Zynga tests Bitcoin, Overstock.com, Tiger Direct, and also the D and Golden Gate hotels that are owned by the same individuals. They started accepting Bitcoin at the counters, not at the tables. You couldn't gamble Bitcoin, but all of this stuff starts hitting the news cycle, and people are going, okay, wow, cryptocurrency is really starting to take off. You go forward a little bit, there's some more bad news. Charlie Shrem, who's the BitInstant founder and one of the Bitcoin Foundation co-founders, he gets arrested. And then a little over a week later, Mt. Gox, which, as an interesting aside, Mt. Gox was started, it stands for Magic the Gathering Official Exchange. So MTGOX, that was just a URL that Jed McCaleb, who later went on to found Ripple, co-found Ripple, he had started this Magic the Gathering website, and it ended up turning it into the first big Bitcoin exchange. He later ended up selling it to this guy, Mark Karpelès, and then through security failings and other types of failings, the whole entire exchange collapses. It gets shut down. Mark Karpelès ends up getting arrested in Japan. Bunch of stuff going on. This is all in the news cycle early 2014, so this is causing more tanking. But again, for this dominance number in green, this is more interesting volatility that I'm looking at and seeing this early on in this news cycle. So we go forward April 10th, Chinese banks close accounts for Bitcoin exchanges, and then the National Australia Bank, NAB, severs ties also, more negativity. And then fast forward May 19th, Winklevoss, they were these two athletes at Harvard. They worked with Zuckerberg actually on Facebook, and they ended up winning this big lawsuit saying it was their idea. I think it was a $60 million settlement. They ended up investing a bunch of money into Bitcoin. And now, last I looked, I don't know the exact numbers. They're in the billionaire status now based on their Bitcoin investments, but they come out and say that Bitcoin is going to be bigger than Facebook. And then FEC approves Bitcoin for political donation. So this is the news cycle of 2013 to 2014. This is that those positives start driving Bitcoin back up. But here's the interesting thing. When you start digging into these dominance numbers, these news events alone appear to be what's causing all this movement. But when you look at this dominance, at first, it just looks like a bunch of noise. It's hard to make things out of it. And the thing is that often the dominance numbers will begin to make moves before the news is actually there, not afterwards. And this is what really got my attention. So I went back and I took all the XRP dominance data and I decided to filter it. And what came of this was not random volatility anymore. There was a signal forming just under the surface. I applied the same techniques that I used when I used to build iPhone apps. I used to have to filter out noisy acceleration data, and from the accelerometers, it would show if you're holding the phone sideways, moving it up or down, bouncing the phone around, that it creates all this noisy input, and it looks chaotic like this dominance data. But I use the same techniques filtering this, and what you end up with is something that looks more like this. So that would be a slow filtering where it's less reactive, and that would be a faster one. Or I take it back. That one is the slow one. This is the faster one. So what you're doing here, step one, I'm taking this XRP dominance data. I filter it out like you see here, and then I start analyzing trends and I start matching this to what is happening in days leading up and then what is happening in days after. But it's all what I would call forward blind. So I did this without knowing what is going to come tomorrow. That would be what I would call, it's like overfitting the data. It's almost like having 20/20 vision in your rear view mirror. So I'm avoiding that. And what this ends up coming up with is the signal generator starts generating buy and sell signals just based on analyzing this filtered dominance data. And so here, what you see, the green dots are buy signals. The red dots, like here, all those red that look like the red stop signs, those are the sell signals. And again, the blue is if you had invested 1,000 into XRP. The orange is if you invested 1,000 into Bitcoin. And then the green is just following the buy and sell signals from this system output. So I broke the full 2013, 2014 timeframe. I broke it into 2-month periods just so it wasn't overcluttered. And then there's going to be a few times where you'll see the news as well. Sometimes the news is actually aligning with a buy or sell signal generated. But right away, Bitcoin's barely up. You get some movement. XRP's almost doubled in this first 2-month frame. But using this buy-sell signal output, it's almost doubled, or it's actually more than doubled the performance of just the buy and hold XRP. And now granted, this is very simplistic right here. This is not incorporating into the trading fees. This isn't a massive number of trades. It's not day trading, buying in and out each day. These are literally at most and often no trade at all. And when there's a sell, it's literally just sitting out. It's just holding 100% cash. So like here, you get a sell signal, it just flatlines because there's no action. And then the green gets, and then you start seeing movement. Red, it's flat until you get another green to buy in again. But this keeps playing out. Again, we start here at 4,000 in this September through November timeframe, and we keep getting the buy-sell signals, and the signal generator is still outperforming XRP. And let me point out too, these time frames that caused, so we'll get to that in a second. Some of these time frames that were causing bad events, the signal generator was spotting this, and it was able to, on massive drawdowns, stay out of it. So like right here in this December time frame, it was an extended sit out period, and that perfectly coincides with this money outflow of out of both Bitcoin and XRP, but it sits out for that. And then here it is buying back in. It actually was pretty uncanny. It's buying in close to the bottom, but this is literally because the dominance numbers are already starting to shift before the prices are having this huge shift. So it's like money is flowing in, and that's increasing the dominance numbers, and that's causing a subsequent rise in the price. And then when the money is starting to show signs of flowing out, it ends up generating sell signals. So the thing is here, like right here, December 5th, China bars banks from Bitcoin transactions. It didn't instantly pick up. Okay. So it's not missing every single bad day, and it's not catching every single good day. But what it is doing, it's following these bigger trends. And although, yeah, there's a drop there over this 2-month time frame, the signal generator's around the 12,500 mark, and then it's finishing at the 15,500, whereas both Bitcoin is down, XRP is down. So this has only been trading XRP, and it's because it's avoiding some of the pullbacks, it's able to outperform. Here, like I said, this isn't perfection, but the whole Mt. Gox saga starts, and the signal generator is not able to generate a positive return over this time frame, but it still is outperforming XRP, just buy and hold. XRP buy and hold, it starts at almost the 4,000 mark, and then it's finishing below the 2,000. So it lost over 50% just to XRP buy and hold over this time frame. Whereas the signal generator started around 15,500, and it's down to about 9. So it's significantly less than a 50% drop, meaning it did not have near as bad of a drop as XRP did. Go forward again. Now it's back. It's coming back again. So here, XRP dropped even more. It went from the 1500 to about 750, whereas the signal generator produced about a 92. It started 9250, finishes closer to the 11,500 mark. And then the final finish here, XRP just barely goes up. It's just under 1,000 and it finishes the year break even. So from August 2013 through August 2014, the first full year of XRP trading, it effectively did nothing. Yet by using this signal generator that's running on the filtered dominance data, you've got what is that? Over a 17x return. When I look at these 6 windows as a whole, through all the sharp drawdowns, the big rallies, the sell-offs, and the gradual recoveries, the system is consistently showing an ability to adapt. It's not perfect, like I said, and it's not always beating everything. It's not always catching all the most perfect thing, but it's accurate in the way that matters, that accumulates over time. It's getting in before the big trends, and it gets out before the big damage. Before I go through where I'm going to head with all of this next, I'd like to hear from you. Have you ever watched a price move and thought, wait, how did the market know before the news even dropped? Because moments like that are what originally pushed me to start looking into this. This system I've built isn't about calling tops and bottoms perfectly. It's not realistic. You can't do it. You're never going to have perfect accuracy. No model is going to do that. But what my goal is here is to respond to capital moving in and out, and not in reaction to the headlines, but often beating the headlines in anticipation of them. And the reality is that most traders are relying on tools that are similar to this, like moving averages. And while those have their place, the thing is that in trading, when you use the same tools everyone else is using, you are going to get the same types of results that everyone else is getting. And I'm trying to build a multi-layered indicator here that is looking at more complex trends than what typical moving averages or simple tools like that would be generating. And I'm literally this is just starting. I have been working on this now for a few weeks, and I wish I could have gotten a video out earlier, but this has been such a big priority. When I saw this, it was just something that I could not put down. I felt like I've got to do something about this. I have to take care of this. And I believe that this is just the beginning. This is like planting a seed of what I believe is going to become like a big oak tree. And my goal is I want to make this more adaptive. It's going to be looking at multiple timescale filtered data sets. I'm going to be testing it over a lot of different time frames, and I'm going to build something that is ultra reactive, a trend following system that can see these types of moves and react to the market zigs and zags and be as predictive as possible, something to augment a normal trading strategy. And if this is something that you find helpful or thought-provoking, it would really mean a lot to me if you'd subscribe, because I'm going to have a lot more about this, and I'm going to be documenting this entire process as I go through it. And over the next few weeks, I'm going to be working on refining this generator. I'm going to be testing all the data sets, and I'm going to be working on building out some systems that I can put online. And if you're interested in following along or getting access to this tool once I've got it in an early prototype stage, then definitely click on this link below and drop your email, and I'm going to keep you in the loop. Remember, this is just the first phase. There's going to be a whole lot more where this came from. This is going to be a super cool tool. This is extremely exciting. This is something I'm so excited about. And if this is something that you're excited about too, be sure to tap the like button. And also, before you go, if any of this analysis on XRP price movements is interesting to you, then you definitely want to check out this video right here, where I go into the full price history breakdown of all the major events in XRP history. Be sure to check it out.